All right, everyone. Thank you for being here tonight. It's Tuesday, June 28th, 2016. Glad to have you with me. I'm Tom Gentile. With me tonight is Jay Harris. And Jay's sitting in with us here on a webinar that we call it Trade Like a One Percenter, but it's really our kind of our market outlook. And so what we're doing is we're putting a couple of things together. And, Jay, Brexit is the most important meal of the day. I wanted to make sure you knew that. Oh, no, breakfast. Sorry, breakfast, not Brexit.
Yeah.
Brexit. We'll be talking about Brexit. We're going to be. I want to go through really kind of my methodology on how I look for trades. And I got to tell you, May is. We talked about selling May and go away. And May was not exactly a down month until just last, and then we came into June, and June was a little rough too. But this week we were supposed to really start to go green. That didn't start until today, but it's been a rough one. And so this is the the time where you kind of you really got to stay focused, stay disciplined. And I want to show you all the stuff that we do as well as I got a Brexit trade for you as well. We'll talk about some time-based patterns, and I've got a book that I want to give you guys that I just got done with. This is my second edition, Trade Like a One Percenter. Talk about how you're going to get that before we are finished for the night. And then I also have something very special for about 50 people. If we got 50 extra home study courses that we printed up, and so I've got those that we're going to offer to 50 folks in the room, and so we'll talk about that as well. So before I go any farther, this session is being recorded. All right, I hit the recorder before we said hello tonight, and I will get that out to you just as soon as the live event is over. If you have questions, you can put them in the Q&A box. I'm going to tell you, because this is an open session, we have got a lot of people in here. This room is going to max out. I guarantee you, if it hasn't already maxed out yet. So hopefully you don't get cut off because it might be hard getting back in here again. Finally, the disclaimer you see on the screen. All right, we put this up on every webinar that we do. And you can read this from beginning to end, especially if you get the recorder. Once you get the recording, you can pause it if you like. But I want to mention two areas in here that I think are the most important part of this disclaimer. Stock and options trading has large potential rewards, but also large potential risk. All right, that's something everybody in the room should know. Number two, me, Jay, everybody else that's associated with Tom's Trading Room, LLC, we are here to educate you. All right, we're not your investment advisor. All right, we don't know what your account size is. We're not brokers. You need a broker to trade with. You must meet certain requirements, and everything I'm going to talk about tonight is in U.S. dollars unless noted otherwise. So let's talk about tonight. So I want to talk about trader types, trading like the top 1% through what I call RBT trading. We're going to review time-based patterns. I'm also going to do a quick review of Money Calendar. I've got my free gift I want to give you, and I want to talk about a one-year mentorship that we got going on with myself and our team. And so we'll discuss that as we move along here as well. I have a question for you. I actually got 3 of them queued up tonight, and this will let me know who I'm working with in here, and give me an idea of how I want to move throughout this webinar tonight. So I plan on being done by 9 o'clock. All right, guys. I'm not going to keep you here forever. I will hang around and answer questions if we have time. But you have a quick poll in front of you. And what I'd like you to do is, the question is, what is your trading style? So select one of the following: fundamental analysis, technical analysis, or I am an RBT trader. And so just put down what works for you, what you're currently doing, whether it works or whether it doesn't work for you. Go ahead and put that down. I'm going to give you about another 10 seconds on this one. By the way, do not answer it in the Q&A box. Just click on one of the buttons and click submit. That's the whole process with this this voting style that we are doing here tonight. And I've got two more for you that really kind of also help tailor the rest of the webinar. So be ready when I ask those questions as well. All right, so let's go ahead and close up this poll. Thank you very much. And I'm going to share the results with everyone. Now, keep in mind, you'll not see your individual results on the screen, but the results of the room as a whole. So what is your trading style? Right now, 16% of you are looking at fundamental analysis as a trading style. And that's perfectly fine because, I'm going to talk about fundamental analysis for just a moment and what time frame I think works the best for it. We have about 49% of the room that is technically oriented. They use technical analysis, chart reading, etc. And 35% of you are RBT traders. And so what I got to think is that the other ones that are not RBT traders are probably wondering, what's an RBT trader? What this tells me is that a very large portion of the room in here already understands how I trade and how Jay trades, Christina, Devin, and the others that are associated with Tom's trading room. And so we're going to get into RBT, but let me go ahead and hide those results and let's move on here. So the reason I talked about trading styles right off the bat is it gives us an idea of I think where to move to. There are basically a couple different trading styles. Discretionary, that's based on where a trader thinks the market is going to go. And I put that down just because that really is where we all start as traders. You know what? I don't care how seasoned you are right now. We all started as discretionary traders, where we think the market's going to go, where we think a stock's going to go. Some of us still use that to this day. Some of us move out of fundamentals or technicals and move back to discretionary because maybe greed or fear puts us in there. All right. I can tell you right now, intuitive trading is one of the absolute worst ways to consistently make money. Right. Fundamental, based on long-term patterns. You're looking at maybe monthly reports, quarterly reports, but you need a minimum of a year's worth of data really to be a fundamental trader. All right. And technical is based on charts, price and volume to help predict future price movement. Now I want to show you my category of discretionary traders. Most discretionary traders, if they don't get out of that phase, are lazy, they're gamblers, all right? And it becomes more of a fear and greed scenario. Fundamental traders are what I call investors, because if you're going to be in the market for more than 3 months, all right, if you're going to be in something for more than 3 months, and a fundamental trader might argue with me and say, no, I'm going to be in the market for over a year, then I'm going to be considered an investor. And that's correct. The government, United States government, recognizes investors as someone who's in a security for a year and a day. All right, you have to be in for longer than a year to be considered an investor, a long-term investor. But I consider investing in quarterly modes. All right, technical trading, well, that can also sometimes be confusing. And I call that a lot of technical traders confused traders because they don't use the same technical indicators. In fact, more technical indicators tends to make you more confused. So what is an RBT trader? An RBT trader is what we call a rules-based trader. They take fundamentals. They take technicals. They take seasonals, contrarian style trading, whatever it is that we can create, find a pattern out of, and put it into a set of rules for entry and exit of the markets. And some of you might say, "Well, Tom, fundamental trading, you can't back test fundamental trading." Absolutely, you can, and we do it. Right? We actually do it in our tools. We do it with earnings. We do it with earnings effects, and we do it with different forms of earnings analysis. So we can actually take fundamental data and look for patterns within it. All right. We would take that pattern. We'd create a set of rules for it. We'd back test those rules. We'd forward test them. And then once we're ready to start trading, we follow those rules, knowing that that's the only way you're going to be able to duplicate what you're seeing in the past and through forward tests. So I want to talk about two patterns today with you real quick before we get into looking at some BREXIT opportunities. All right. So the first one's a 5-month energy pattern. I've been discussing this one since February. All right. The reason I'm bringing it up now is I'm just going to bring it up as a quick pattern. I'm going to talk about it for 60 seconds, and we're going to move to the next one. So the 5-month energy pattern is a very simple pattern. All right. You look to buy energy in mid-February, and you look to get out of it around mid-July. All right. So we bought energy in mid-February. In fact, pretty much every one of you in this room who've been with me since February had access to my 2016 Energy Opportunities Report. I hope you took advantage of that, because we saw some major moves to the upside in oil, in USO, in OIH, in XLE, and we had a webinar, or a couple of them, where we actually gave out those trades, and they did extremely well. All right. So last month, we had talked about this with our members. We talked about something called the gold pattern. And before I get into the gold pattern, let me talk about for a moment as I'm queuing up question 2. One of the questions that comes up a lot is, Tom, how do you pick strike? How do you determine what strike prices make the most sense? What I do is I map out, all right, where my target price is, where the target for the market is. So the target for crude oil was between $45 and $50 a barrel. That was my target. And so when I started looking at alternatives, and my alternatives were looking at options, all right, I would look at options on crude, but then I thought, all right, let me look at the options on OIH. And my target on OIH was 32. And then my target on XLE was 65. So I had these targets, and I based my options around those targets. And I'm going to show you an example of that here in just a moment. The other big question I had happened to deal with option liquidity. And it was, how do you determine whether an option is liquid or not? And so guess what? I'm going to ask you that question. So my second question for you tonight is, what is the best way to measure liquidity to an options trader? So those of you in here who are options traders, I want you to select one of the following. All right. So on this quick poll, I want you to click on whether you feel options volume is the best way to measure liquidity, open interest is the best way to measure liquidity, bid-ask spread, or be honest if you have no idea. Type in, I have no idea. I don't get the names. I don't get names of who puts this in. This is a completely, it's hidden from me. I get the overall quick poll. And then I like to show the overall quick poll so I can show what everybody in the room sees. Only you will know what you pushed on this button. All right, so 10 more seconds. Please choose one if you have not chosen it yet. And then we will look at how the poll came out. All right, I'm closing it up. So here we go. Let's go ahead and share those results. And the best way to measure liquidity to an options trader. Well, options volume is something that lets you know that trade is being facilitated, but it doesn't tell you it's not the best way to measure liquidity. Open interest also gives you an idea of traders that have a position, all right, an open position in a particular option strike. But it also is not the best way to measure liquidity. Number 3 is the bid-ask spread. That is the best way, because when you look at a bid offer, you're able to tell if traders are being able to give you an efficient buy and sell at the same time. The tighter that the bid-ask spread is, the more efficient it is you are able to get in and get out of any options position at that time. All right, so I'm going to give you an example. So yesterday, Jay and I were looking at airline stocks, all right, because they got hit. The whole travel industry got dumped on yesterday. I mean, the market got dumped on a little bit, but the market got dumped on big Friday. Monday, we had a little extension of that, but the travel group got hit hard. And we were looking at some airline stocks that were down 8 or 9%. And one of our trading strategies, which is called Darknet, started popping up different trades, and we were looking at trades on these 3. And in the morning, I'm looking at trades, and the option volatility was just high. And the opening time in the morning is the worst time to actually get into a trade as a long option trader. It's actually not a bad time to get out of a trade because volatility is high, but it's a bad time to get into a trade because you don't know where the bid offers are. They get wide. They start coming together, and then by around noon, all of a sudden, we were seeing. And Jay, tell me if I'm wrong, but we were seeing stuff in the airlines. I was seeing at the money options that were like 2 pennies wide between the bid and the offer.
Yes, sir. Yep.
Yeah, I was not expecting that. And all of a sudden, whoa, here's something. This is great. And of course, if you look at airline stocks today, they moved up just like the rest of the market, but they doubled themselves on the way up, where they doubled and tripled themselves on the way down. They had a nice little bounce back. But I would not have known that liquidity was even there. Simply because unless I was looking at the bid-ask spreads, and that's what I was doing. I was looking at bid-ask spreads, and all of a sudden they got tight because the market stopped moving, and it became more orderly. And all of a sudden, the fear gauge, which is implied volatility, started to creep down a little bit. And when that happens, those bid-asks come together, and great stuff. So I bring that up because I want to show you the next pattern that we were talking about with our tools members, and that is the summer gold cycle. So we did a series of trades in the summer gold cycle, and I want to share these with you because again, what was the pattern? Well, this pattern was actually a seasonal pattern. So the seasonal pattern that we're looking at was off the money calendar, and we were looking at a longer term pattern in GLD. All right. And this one was an 80% pattern that we saw with GLD. So we mixed this with something called channeling, where we look at long, short, and intermediate term channels. And the channels on gold for the intermediate and short term were basically up. I'll show you that channel here in just a moment. But we had a nice pattern developing here in gold. Now, we did not know about BREXIT because this was a couple weeks ago we started looking at this, right? I mean, you look at the trade details, and we were really looking at this just coming out of week 3 in June. So we're taking a look at this, and at the time, I got to tell you, most people I knew thought Great Britain was going to vote stay, and that's what everybody in the street thought. And then they came in with that vote, and it was like an anvil hit the market, and gold, which was already trending up, spiked up. In fact, there was a little pullback in GLD today, but it wasn't really much of one. And I actually think that means we're getting a little bit of a pause in this rally. But I'm showing you this for a reason, because we actually went in and started looking at these trades. And a couple weeks ago, we were looking at these, and I was putting pretty loose spreads on these. So the first one we looked at was a call option, simple call option. All right. So we're looking at a simple call option, and we're looking at potentially 100% return on this call. Then here's your example of how this order is actually placed. Now, if I back up for a moment, the bid-ask spread on this was 5 cents. That's tight. That is tight in gold, all right, in GLD. So go in here, and one of the big rules that I like to use for myself is I never place orders at the market to get into. I'll do them to get out. If I need to get out of something, then I'll get out at the market. But I never place a market order to get in. I don't like chasing trades. I might reset a trade. Like today, for instance, I was long S&P, and I started getting long last night in the overnight markets. Yes, on my birthday, I'm trading S&P. And so, and then this morning it popped up, so I had to reset my option position. So I reset my strikes and went in because the market looked like it was not pulling back. And that's when S&P was trading around 214, 215 or so. And then it just skyrocketed up and kept on going. We actually ended up closing up close to 2030 on the S&P. So it was a nice jump. But again, I look at these things and I try to find number one, target. All right. So what's my target on GLD? At the time, my target on GLD was 130. So I offered up 3 positions. First was a call. And the call option, for instance, if you get filled at like, and I put some pretty loose stuff out there. In fact, the fills ended up being much better than what we got here. I'll show them to you. So 125 calls were a limit of 3. Now, if you buy a 125 call and your target's 130 and you pay 3 for it, what's the most that call can be worth? 5. And then 5 minus 3 is 2. So that's really not a 100% return. But if I could get this for 250 and I could sell it for 5, that is a 100% return. Second trade I was looking at was a bull call spread. All right. Buy the same 125 call, but then sell 130 call against it. All right. So basically what you're doing is I call it a loophole trade because it's a way of getting paid to trade the position. All right. We're paying ourselves back some portion of what we spent to create a trade that does have limited risk, all right, has much lower risk, all right. In this case, the risk was about half that. The reward ended up being a better reward, 266% at this price. What is this price? And that was $1.35 or better, okay. And I'll show you the prices of where they were, even just last week to where they are now, because we talked about this one a couple of different times. And then so with bull call spreads, again, what's my target? My target's 130. That's why I picked the sell. I always like to sell the target, all right? You buy below the target, you sell at the target. It doesn't guarantee you're going to hit the target. It's just you got to start from somewhere. And see, options traders, I think, are in 3 different categories. There's the price option trader. That's all they think about is price, price, price. Those are the guys that end up losing money, and they're more of a gambler, right? Then there's the price and time trader. There's the price trader that also realizes he only has a certain amount of time to be right, and he's got to come up with some sort of an idea of when to get out of that position. Now, consider your price trader like someone that walks up to a blackjack table and just wants to play so they could say he played, all right? And, that person ends up walking away with less than he came with. Consider your bull call spread trader someone that knows basic strategy, that understands a little bit more about how options work, all right? And says, you know what, I'm going to cut my costs, I'm going to cut my risk, and I'm going to give myself a better chance of break even and a higher probability of making money. And that's what the spread allows you to do, especially in times of high volatility. And then you've got that third trader, that kind of card counter, if you will. And that's your card counter right there. Your card counter is someone who can put together a delta neutral position, which is what this is. All right. This trade is a trade it is delta positive, but it sheds off a lot of cost and risk. All right. The one thing you're replacing is, I kind of call this type of trader someone who's target shooting, who really has to focus on that target. And in this case, the butterfly trader buys the 125 call, sells the 130 call. Remember, 130 is still the target, and buys the 135 call for protection. So buy 1, sell 2, buy 1, and put that together, and you're talking about a trade that costs less than $100, all right? Or less than $1 times 100 shares for a contract, less than $100. So, you could look at these a couple of different ways. I call them the call, which is the like going to eat at the 5-star restaurant, all right? The call spread, which means you're going to go eat at a sit-down restaurant. And then the butterfly, the cost of the butterfly is like walking into a fast food restaurant in terms of cost, all right? Now, the rewards are quite different too, meaning that there's a reward on this butterfly. It says 614% max reward. That's if you're sitting all the way out here. Chances are that's not going to happen, right? But if you could get into this area where you've doubled your return, all right, as the market moves higher and as time drifts down. All right, see, what we want to have happen with a butterfly is we want to be timing this market just right. Because if we time this thing just right, then we can be sitting out here at 100, 200, 300, or even 4 or 5 to 1. That's potentially doable. This trade was actually a $70 limit trade. Now I want to show you where these were last week and then where they were yesterday. All right, so for that, I'm going to move out of the presentation, and I'm actually going to go into our tools. And so this is our option tools. A good bit of you in the room have these, so you know, if you want to follow along with me, you can. Those that don't, just keep your eyes on me because I'm going to take you to the promised land in terms of calls, call spreads, and butterflies, and show you how we kind of manipulate and work our way through those. So let's start with a chart of gold. So we have all kinds of charts on here that you just won't see anywhere else. This is a chart of the stock with an overlay of the 7 to 30 day options premium. So, and I want to teach you guys something. I talked about this today at our live event, which was when the markets are open. I was talking about how most of the time when volatility, when stocks go down, volatility goes up, right? But you notice this particular pattern, this ETF is going up and volatility is going up with it. Then it calms down and volatility calms down. Then it makes a little spike up and the volatility spikes up again. And then it actually goes down. Okay, this ETF goes down and volatility goes down. Then the ETF goes up. This is not typical of an average stock. But then again, this is not an average stock. This is GLD. So if you want to write something down tonight, this is something worth writing down. Tangible ETFs like gold, all right? When the price moves up, volatility actually moves higher. When the price goes down, volatility moves lower, all right? Unlike stocks, where when a stock, like, you know what? Take a look at Nike tomorrow, symbol NKE. It's going to go down. And the reason it's going to go down is because they had bad earnings, and it was down 6% right off the bat in the aftermarket trading. Watch the volatility on Nike because the stock's going to go down and the vol is going to go up, okay, which is typical. But ETFs, and not ETFs, but tangible commodities, right? Commodity ETFs or ETCs, exchange traded commodities, those tend to move, volatility and price tend to move together. Right. Let's see. The other one I wanted to show you was this is just a stock chart. Let's see. Let's look at channels for a moment. So this is channels, and this is one channel. But if I go over here and I click on my up, sideways, down channel, I just do a channel test on these. What it's going to show you is that gold is in an intermediate and a short-term uptrend right now. All right, and it's come close to hitting an area right here around the 120. What is that? 126, 120. Oh, just near 128. Hit it 127 and pull back a little bit. But I expect this trend channel to continue. And what I do expect to have happen is I think gold's going to pull back. I also think this short and intermediate term channel are going to collide right down here at 122. And that could be the next turning point for gold to move higher. So I'm expecting gold to stay in the pause. And then, it's going to pause, and I think it's going to rejoin that rally. That might take a couple weeks. And that's okay because I think in a couple weeks, things are going to change once again. So that's our quick look at gold. Let's look at one more thing. I'm just curious. Darknet, which is our contrarian channels, I have not looked at this yet, so I don't know. Okay, so we had a buy on gold way back here somewhere. Here was the sell. The next darknet where we see channel collision occur. Channel collision occurred right here at the beginning of June. And then, of course, we had a sell signal up here. So we had a buy at 116, and the sell came around 122. But this was based on really based on about a three-week movement, all right, 3-week pattern that we look at. All right, and so that was the pattern on GLD. But definitely the trend is up. You got the long-term trend or longer, and you got the short-term trend all kind of moving in the same direction. So then we turn to our stock charts. Our option tables. And I'm looking at GLD, and what I did was I'm looking at August, which was the trades we were discussing. And so what I want to show you is on each of these, and I'm gonna kill the graphs. I want to show you how we actually put these together. So the first one, come on down. Here's gold. This was gold last week, 2 weeks ago. It was 2 weeks ago and last week. So the 125 calls. Trading at $1.81. All right. And so I'm going to take that $1.81. Let's go ahead and hit a risk graph on this. And here's our gold trade. And you can see limited risk, unlimited reward up until you find a sweet spot. If the sweet spot in gold is 130, I come up here. This says 130.3. I'm going to come right over. I'm going to scroll over. I'm going to see where would we be at today. So I just put my mouse on the chart. As I put my mouse on the chart, I got something that popped up over the chart. Let's try one more time. There you go. So you'll get a little pop-up that shows the profit. All right, and that's the profit if gold were to hit 130 today. That's a theoretical profit. If it was to happen at expiration, I'm going to get a profit of around 332. That's if it hits just around 130. Now, let's hold on to that. Let's go back to our stock and option table once again. And I want to now do the loophole trade. All right, the spread. So we know it's $181 to the call. Let's do the 125, 130 call spread for the same month. And I'm going to come up here and I'm going to hit the risk graph again. And now it's going to give me the call spread. And I see the call spread. I see the limited reward. I see the limited risk. I see that it's going to cost me less. It's actually going to be $87. All right. And finally, go back and we'll do the last comparison, which is the butterfly. And for the butterfly, I'm going to need to sell 2 of the 130s. We'll keep the 125. We'll sell 2 130s, and we'll buy a 135 for protection. Come on down. Let's go ahead and risk graph that. So we discussed this in 2 different areas. One was we're doing a big butterfly mastery series right now, which we discussed this in. And then also we did this for our tools guys just not too long ago. $43. So let's go ahead and look at each of these for a moment. So I've got a 43, I've got an 87, and I've got a 181. All right, so really nice, I mean, big drops in risk from the call. Now let's start with the call for a moment because I want to take us forward a day. All right, now this was Thursday. So here's Friday BREXIT. Look what happened. Boom, 143% return. Here we are in the graph right now. We're up here. Red line is today. Here's BREXIT vote. All right, now here comes Monday. Let's go ahead and push it one more time. I'm showing you this because I want to show you that you can, within our tools, you can go and backtest any option strategy you want and look at day by day the results of what happened. 165% return. All right, let's go ahead and look at the spread, the call spread. So here's the call spread. And again, it was trading at $87. It was trading at $87 a week ago. All right, but look what happens. I wanted to save us some time, so I put us right before the excitement started happening. 120% return in one day, but between 87 to all of a sudden now you have a $105 profit. Let's go one more day. Now it goes from 105 to 121. Now, interesting, and I want to take you back for a moment. Look at your call spread graph. Now down here, I want you to look at these graphs. These are important. All right, this is what the 1%ers look at. The 1%ers look at volatility, and they notice that volatility is going up. So it may be a good time to consider getting out of the call trades if you're in a call trade that's going to expire, before August, for instance. Because look at the lean on volatility. This trade, by the way, if you take a look at this trade, so you got $299 of profit. I want to come down here. I want to show you what happened. Now, this is August, so we're looking at the green line, 60 to 90 days, not the red. So if you look at the green line, you can see on the green line says that volatility jumping up represents about $125 of that $299 profit. So guess what happens when gold finally tames itself? You'll see about a $125 drop in profits, all right? So it's important to realize that this is a very Vegas-sensitive trade. Now, the one we just looked at, all right, the bull call spread, is it so Vegas-sensitive? No, because it's standing straight up. You know why? Because you've hedged Vega. You've hedged Vega how? By selling the 130 call against the 135. The 125, I'm sorry, 125. 125 calls up 299, as we know. The 130 calls lost $178. But between the two, the spread is still up 139%. And what's also really interesting is that if volatility drops, it's not going to affect this spread as much as the call. Now let's take a look at the butterfly. So the butterfly trade, We see it here. You know, that's the McDonald's cost. Well, for you and a few others, $43. Let's push it forward a day. Here's Brexit vote. Bang. Okay, so now it's up $40. So it's up 93%. What happened on Monday? $46. So it's up 107%, but it's only $46. What's going on here? What's going on is this. It was down here 2 days ago, 3 days ago. Now, the blue line represents where gold is trading at, and here's where we are today. And we see that we're up a little bit on that trade. But the thing is if we get up here too fast, I got to pull the trigger and get out. Because look what happens when we go above 130. Then we start, as higher we go, we start creeping back down. You know why? Because these two options here, these 130 calls, start working against you as fast as these ones, actually faster than these two work in your favor. That's why you see that roller coaster start to drop back down into the loss zone. All right. How about Vega on this one? Look at Vega. Vega actually is, now remember, this is break even, but look what happens. It starts getting low. It gets closer and closer to break even if it goes higher. That's because the nature of this particular trade. This trade is 125 call, 130 calls, and 135 call. You've tried to negate as much risk as possible. But what you've done is you put yourself in a position where you have to really be a target hunter. And you've got to hit the time and price have to collide at the same time around 130. All right. So that is the gold trade. All right. So let's talk about some Brexit opportunities. So Brexit opportunities, well, probably the most important one I want to discuss with you is, I looked at stocks, I looked at bonds, I looked at currencies, and I looked at commodities. And gold's already well on its way, all right? So, we'll talk about stocks for a minute. So stocks, right now, if I were to look at stocks, first thing I'm going to do is I'm going to come over to my tools, and I'm actually going to hit my money calendar. So I'll go to, let's see, searchers. I'll go to my searchers, and I'll hit my money calendar. And my money calendar, I'm going to go bring up a month. And I got the month of June right here. Let's go down to the bottom. So notice what happened. This has been a mess. Red, orange, yellow. Orange and yellow really kind of tell me, in a lot of cases, to stay out of the overall market. Got a little bit of green, but then turned back to red. But look what happened. We started going green last week. Now, Brexit vote kind of put this on hold, but I believe now that we're going to start to see a little more green coming in. And this is this week right here. All right. And then if I click on July, let me give you a glimpse into July. So July looks green through the third week. Now look what happens after week 1, week 2, week 3 expiration. So after the July expiration, then we start getting ugly again. Do you know that this actually collides with when earnings really start to hit? I mean, we're going to hit earnings here pretty heavy after 4th of July. All right. But it doesn't start to peak until we get into week 3, week 4, and then week 1 and 2 in August. That's when the peaks happen. And isn't it interesting that when we start hitting peak earnings in the summertime, how we start seeing more and more negativity coming in? It's important to know that. Right. But I want to get back to today. So what I'll do is I'll do a couple things. I'll click on something of what we got going on today, and I'll sift through this. And I'll look at what's red, and I'll look at what's green, and I'll come up with a trading opportunity. But before I do that, I want to show you one that we found in stocks, bonds, currencies, commodities. So I like, if you see here, SPY and DIA are on this list. So when you actually start seeing the overall markets on the bullish side, that's great, right? And these are, 18-day trades. And there's some other ones we can look at here. Wins on the bullish list, Priceline, Celgene, Shire's on here, IP, LUV, which is an airline stock as well. That ought to be interesting, seeing as we just got out of 3 of the big ones, and that was not one of the ones we were in. But you got all these, and I'll click on those a little bit in just a moment with you. But FXE, so that's the one I'm really interested in right now. So let's kill this. Let's kill the gold trades, and let's get to the FXE because I have it set up, and I'm looking at Brexit to me is it's gone, it's done, it's over. I think we'll get a short-term little bounce on it, but you know what Brexit, what concerns most people about Brexit? It's not what Great Britain did. It's what the other countries might do. They're all standing there and they're seeing what Great Britain just did, and they went, "Oh, we can." Now that they did it, we can do it too. And I think countries like Germany, who is I think one of the strongest in the EU, could potentially move to do this. I mean, I'm gonna be getting into this more and more and discussing this in greater detail on some of my future webinars. But I mean, you're talking about it's almost a young versus old, where the young want to stay in the European Union and the older people just are saying enough is enough, mainly because of free migration. All right, migrants being able to move freely through Europe, and there's some economic concerns, there's some political concerns, whatever the case may be. Here's what I want to show you. If you believe that that this is the beginning of some confusion overseas, might I show you FXE, which is basically our the Guggenheim Eurodollar. All right. So we can look at this and we can trade this. And I've already been saying that I think the euro is going to hit par by the end of the year. Now, euro's at 108 right now. But if we were to look at, say, the 105 puts, let's just hit this and look at what the 105 puts could cost us. This is between now and January. So it's a longer term trade. But we're talking about something that costs $215. Now, if at 105, if we go to 100, that means that we have 5 points of intrinsic value in this put. If we paid $2.15 for that, then we have potentially a minimum $2.85 profit, or better than 100%. All right, so that's one way to look at this as a put. Limited upside risk, and then great downside reward. Now let's look at the next one. Next one we want to look at is, once again, how about the spread? 105, let's look at the 100s, because the target's 100, remember? You sell the target. Going to sell the target. Going to risk graph this. And here we go. And now this one's $111, so almost half price. But then look at the reward to risk ratio, 350% return. All right, here's your upside risk. Here's your downside potential reward. Now, need I even put the butterfly up there? Let's go ahead and look at it. Can we do a butterfly here? Absolutely, because there's still a lot of volatility built into this. And so I see the again, we're long the 105 puts, we're short the 100s. Let's sell times 2, because we need to put a times 2 in there, a minus 2. And then we're going to come down, we're going to put a plus 1 at the 95. Remember, I equally distance these 105, 100, 95, equal distance apart. So this is a directional butterfly. Let's see what this is going to end up going for. $57. All right, with a 777% maximum reward to risk ratio. Now that is if we hit the sweet spot in January. I'm not expecting we hit the sweet spot in January, but what if we hit the green spot? All right, say in October or November. Or hit the green spot, your $50 risk is going to return $125. All right. So of the three, do you know which one I like the most? It's not the butterfly. It's actually the spread with its 350% reward to risk ratio right there. That's the one I like. And so that's a Brexit opportunity. The other Brexit opportunity, and this is a long-term Brexit opportunity. I think I also think that if gold were to pull back, that might be a great opportunity to enter in again on gold. I think 122, 122 and a half might be a good pullback area to enter. I looked at the stock market, and I do think the stock market's going to move higher over the next couple of weeks, but I do think we're going to crest again and roll back over. Right? Do we crest at 2100? Perhaps. I mean, 206 to 210 on the SPY are the resistance points right now that I see. Bonds, I think bonds are overpriced, but I also believe that the Fed is not going to raise interest rates for the rest of the year. And since Moody's just cut the risk in the UK, they downgraded their bonds in the UK. That makes our bonds look more attractive. So, where I'd like to be a seller of bonds, I just wouldn't touch that right now. So I like European currencies on the short side. I also want to let all of you know that in just a couple weeks, oil. I think if oil gets back to $50 a barrel, which it's trying to, I think that's a great bearish opportunity right there between now and the end of the year. Simply because there's still a glutton of it out there, and we're out of the seasonal bull. So those are some Brexit opportunities, but I wanted to take you into details on this one because I thought FXE offered the best opportunity that's out there. All right. So that's Brexit opportunities. Now, let's move on to question number 3. Before that, Jay, is there anything out there that you see that's being asked a whole lot that perhaps maybe you're not able to get to or answer, other than my Land Cruiser? And great comments, by the way, everyone.
There's lots of good comments there about their view on the bank exposure, on who's to follow, and just a lot of commentary on the Brexit there. Now, not so much direct questions, but good commentary going on.
I see James is asking about, balance. Do we always balance butterflies? And the answer is no. All right. We can modify butterflies. There's we discuss modifying butterflies, and we actually even have some scans in our tools that create modified butterflies for you. But you know what? I don't like modifying them to the upside. I'll modify them to the downside because I know where the floor is. The floor is 0. To the upside, there is no ceiling. And so I get a little nervous about modifying things to the upside. But that's, that's one. And then Robert's asking, why did I choose puts over calls on the FXE? And Robert, I'm going to assume you're asking me, why did I do a put spread instead of doing a bear call spread? A bear call spread is a great idea too. But here's the problem. I'd rather do a bear call spread with less time to expiration, because if that's a credit spread, I don't want a 1-year credit spread. It's just, the reward to risk ratio is just not something I'm be excited about getting into. And then the last one I'm going to talk about, because I got so much other stuff I want to cover with you here, is Rich is asking about, can you do all three GLD trades? And the answer is not in one account, because, think about it. You can't have the 125 call on you could have the 125 call on its own, and then you could have the 125, 130 spread on its own, but you can't have a call spread and a butterfly on at the same time, because they end up overlapping each other. And your broker will tell you. You ask your broker, they can go into the specifics on it, but that's that's the concern that as far as holding all three trades at the same time in different accounts, you can. And if you do have all three, you might want to take a look and see how do you have all three. If they're in sub accounts, yes, but it's kind of hard to have a 125, a 125, 130, and a 125, 131, 35. You know what? Actually, I take that back. You can if the strikes are the same, but if you're deciding, hey, I want to have the 125 call, 125, 130 call, but I want the 130, 135, 140 butterfly. Sometimes when you start messing with different strikes, that's where you can overlap them. All right, and so that it can get a little bit messy too. Keep that in mind. That kind of stuff can get a little bit messy. But I can see a lot of you in here that were at our last webinar that are doing these. Pretty happy with them so far. They're working out really well. Remember, this is an August expiration, and so they take a little bit of time. This isn't something where if you want to get in and get out now, you can. But that you're, especially if you're looking at butterflies, you're going to leave a lot on the table. Calls, I'm with you. Call spread, maybe half. But butterfly, you got so much that can come out of that. I think it's something to hang on to a little longer. And again, that's my opinion. All right, that's not my recommendation. Okay, so question number 3. because I also see some questions that are coming out about how do I get more information, um, you know uh, um, how do I become more knowledgeable, how do I get more time, how do I put the time into being into an option trader, what kind of discipline is involved in that leads me to ask the last question of the night, and that is the poll that I want to give you now. And so we got a good third of the room in here that are what we call RBT traders. Okay, those are rules-based traders that are using our tools. All right, that are attending classes that we offer. Jay, I looked it up. Do you know that with our annual tools, the folks that are with our annual tools, they get we do 3 2-hour sessions per week while the markets are open, and that actually ends up being I think we added it up. It was like you look at the fact that that's 6 hours a week of live webinars. So you take that, multiply it times it's what is that, 300? It's 300 hours a year that we do of live webinars for our tools, for our folks at our tools, and that is everything from long term to short term that we do on a 3 days a week, and that doesn't include all the other stuff that we do. But the poll I'm putting out here, guys, is for those of you that are not in the RBT area. That's what's keeping you from getting to your goals as a trader, and some of it may be lack of knowledge. Some of you, it might be just lack of time. Maybe you got the knowledge and you're just like, gosh, I can't get. By the time I get home, the market's closed. Those are the guys. I remember when I used to work and I tried trading. I always took Fridays and Mondays off, and I worked like Wednesday, Thursday, Friday, and Saturday, Sunday, and it really sucked. But it gave me the time, and it actually helped me increase my discipline too. Lack of discipline is a big one. A lot of times, and I found this hard for me in the beginning, is that I listened to a guy on TV, and he was screaming, buy this, sell that. And I went and did it, and I was done. After I did it, I actually ended up getting a margin call out of it. First, I blamed him. Then after I got done blaming him, I started thinking about it. I thought, nah, you know what? He didn't put a gun to my head and tell me to do this. He didn't tell me to put my entire account into this one trade, because that's what I did, because that was lack of discipline. And then I realized if I want to really get into this, I need to get a little more knowledge. Obviously, I got to get a little, the time factors is not that bad, especially if you're doing longer term trades. But discipline is one of the most important things that you need to understand. All right, let me close this poll up and let's share some results. So here we go, Jay. Lack of knowledge, 18%. Lack of time, 15%. So most people in here have the time or can find the time to put trades on, take trades off. And, a lot of your time is actually done, for me, it's research. And I do most of my research when the market's closed. Lack of discipline, 20%. All of the above, 41%. So if you realize this, we got 6% are hitting their goals. And we just, like I said, within just a few months ago, started getting our RBT numbers are going up, our numbers of RBT traders. So they still need that knowledge and time and discipline. They're getting it. But I put this out here because I want to offer some of you. First of all, I'm going to give you that book that we got. That's a great book, and it will tell you a little bit more of all of the information you see here. But what I also want to do is share for a few of you the chance to go pro with me, Jay, and the software that we have. And I want to show you a little bit more about what our software does. I'm going to do this very quickly, so there is no way I can show you everything. There's no way, absolutely not. But what we do is we have something called Tom's Option Tools, and our option tools. Once you get past the login screen, we have step-by-step processes on how to do things like create folders. We talk about general settings, but we'll also show you how to create option trades, use the back tester, darknet, money counter, you name it. In fact, when you sign up, when you become a member, we actually send you out the first 5 to 7 videos we'll send out to you. And then from there, you can browse through the library of videos that we have after that to your heart's content. This is an example of our searchers. So give you an idea of some of the stuff that we can do is that not only calls and puts, we have married puts and covered calls as well. We have collars. In fact, some of you are going to be joining us real soon for our collar mastery program. That's going to be coming up here within a few short weeks. We have straddles where you can do searches on straddles, credit spreads, calendars, butterflies, condors. We have a trade called Tarzan Loves Jane. And, I think for our next one of our next webinars that we're going to do for our tools guys, I think we need to get into the TLJ trades, Jay. There's the modified butterfly, and that's what when we had a couple folks asking about the strikes and do you keep the strikes the same, and sometimes we don't, and this is called a modified butterfly. We also have something called a matador, which is a modified condor. And there are certain circumstances where these make the most sense. Then we have these really cool things called Smart Search, a way of finding trades, whether it's on a single stock, it's on a sector or a list, or it's on the entire gamut of optionables. And then if you just think you're that smart, you can make your own strategies. You can actually make your own strategies. Maybe it's a four-legged, five-legged, six-legged trade. You could then save that strategy and run it just as you could run any of these other strategies you see here. That's option trade searchers. We have a way of looking at what we call market overview, and we look at these in terms of implied volatility, statistical volatility, and how we rank these. Something called market overview that we do. This is an example of one of our charts, and all of these are autos. You don't have to draw the stuff on the screen, right? One of the things I found is that in my trading that if I set the parameters and I let the computer draw the charts for me, that we're all looking at the same chart. If we all took a chart of this for American Airlines, for instance, and we all said draw the support and resistance and draw the channels, we're all going to come up with different ideas of where the highs and lows are at and how they come together. But if you have the computer run its algorithm and do it for you, and this is our darknet algorithm or our channels algorithm, then we're all going to be looking at the exact same thing. This is something really cool. I want to show this to everybody that's on here tonight. So those of you that are in our tools or that have access to our tools, this is going to be released very shortly. It's already in beta test right now. You can see the screen, but we call it auto fibs. So what it does is it actually automatically draws the Fibonacci lines for you based on what the computer algorithm sees as highs and lows in the marketplace. And so as you can see here, auto fibs, I would imagine, and I got to get with the programmers again, Jay, but I would imagine this is going to be available within the next couple weeks. I'm hoping we can have it out very, very soon because a lot of people are asking for it. So
I've got a lot of people loving what they're seeing right now and posting on the boards here.
I mean, I just threw this one up here, but it's really cool. I mean, you could just, you just go in and here, I got to show it to everybody. So everyone knows that it's actually real. I didn't just draw those charts up there. So eventually what's going to happen is you're going to go to stock, you're going to go to charts, you're going to come down. Right now it's called peak fibs, but I like auto fibs. And so I'm trying to get them to change it to auto fibs. So let's take a look at FXE auto fibs. And so here's our FXE auto fibs right here. And so based on, what the past is held for FXE. Let's look at one of PCLN, Priceline. All right, so auto fibs on Priceline. And we'll be doing some classes on how to use the auto fibs as well. And so this is, it's there. I didn't draw it, bang, it's right there. It gives you what the computer determines as the most appropriate lows and highs. We take it off the closes. We don't take it off of the off of a high or low because sometimes those spikes can I'm not really a fan of spikes when it comes to drawing on charts. I like to see the actual candle, the open or the close. That to me is more important. So that's auto fibs, and that's something that is coming real soon. We're going to launch it probably within the next week. This is Darknet, and what Darknet does is it is our channel. What we do is we look at channels, and it gives us appropriate buys and sells when channels collide. And so this is an example of the S&P. The last time we had a buy signal with Darknet on the S&P was back at the beginning of May around 204, and the sell was right up here around 211. So it was a nice little trade, Darknet. So the other thing, and this is an example of a darknet scanner. We had darknet scans that were coming back on gold and on, in this case, Agnico Eagle Mines. It was a buy today, actually, in darknet. Everyone in here who knows me knows about the money calendar. Money calendar is something really, really cool. We can actually click. We can go within the money calendar. And I can actually click on a day. Show each day will give me patterns that are 90% or greater going back in time over the last 10 years. And if I click on a day, then it's going to actually open that up. And I'm actually going to show you. Let's go ahead and look at potential opportunity. Yeah, you know what? It's going to take me a little bit longer than 9 o'clock. And I apologize, guys. I just have so much I want to show you. But let's go to money calendar. So we'll jump up to searchers, Tom searchers, money calendar. And I want to just show you an example. This is one I was actually looking at after the close today. So come down to June 28th. And what I like to do is I like to rank these. I like to rank them by average profit. So here's my average profit. And price line's up here at the top. But that wasn't the one I was looking at. I was actually looking at, come on down, Procter & Gamble. Right? Because for the last 10 years, Procter & Gamble has a nice bullish pattern that runs from June 28th down to July 22nd. So, part of the package that we have gives you the ability to go in and use money calendar every single day, all right, as much as you want. It's an unlimited money calendar. We also have something called TradeStream Real-Time Analytics, where we have the real-time, our partners at TradeStream, we get you the real-time package, and that also includes our daily webinars. We have videos that come out. We have videos that come out every single month. These are in addition to the webinars that we do. These are short little videos. This is a newsletter that I put out every single week that teaches you how we look at these markets and how we look at these scans and how we create trades within Tom's tools. All right, so this is something that comes out every week, and you can actually go back and you can hit every single one we've had in the past. We have every date out here. These come out on Wednesday evenings, just to let you know. We started doing it on the weekend, and when we found that we'd like to, we didn't like that 2 days off by the time the markets opened up again, so we went ahead and did it Wednesday. So hump day is the day that the market outlook generally comes out. Now, these trading tools are all part of members-only tools, and they also include, like I said, options analysis, darknet channels, the money calendar, my newsletter. So our pro annual membership, and this is an annual membership, guys. So if I'm going to show you a couple ways that you can try us out if you want to. But this one package I have here for tonight is fantastic. But if you go to Tom's Option Tools, all right, if I go to login, you go up here in the right-hand corner, you see a 7-day free trial. So we have some special prices that we're offering. Our option trader, which is just the option tools, and the ability to back test on all the option tools, is $79 a month. We have a $149 a month free trial for the tools and the option tools and the darknet contrarian. If you want the money calendar added on, it's $199 a month. And then if you want the TradeStream real-time package and everything, the whole kitchen sink, $399 a month, which actually comes out to be about $4,800. All right. So adding on the alert publication, which we're adding on as a bonus, this actually becomes a near $7,000 price tag. So what we're doing is, and like I said, it comes with the option tools, darknet, money calendar, TradeStream, my market outlook for 52 weeks, 52 weeks of videos and live support. We also have 150 live market webinars that you will receive as well. That you'll get invitations to 3 days a week. Myself, Dave Shamans, and Steve Novak, who is a professional day trader. And so that you get a little bit of the long, the intermediate, and the short term all embedded into this. So it's 300 hours of live trading and training. This is a regular price of $7,000. What we're doing is we have a special discount prepay for the year, and it's only $23.88. And I'm going to make this even better because we're doing an offer for the next week at $23.88. But I'm going to do something that we did back in April, and I'm going to do it again because we have about 50. We had about a copies of our home study course. Our home study course is 4 manuals, 600-page course. And this home study course, by the way, some of you in the room got the home study course because you're part of this package. Let us know right now what you think of it. I've been getting solid reviews on it so far. Thank you very much for that. But I also want to type in http www.tomgentile.com/professional trader. I think I spelled that right. If you click on that link, for those of you that are interested in this, it will take you to our professional trader package, and it will show you the savings of $4,800. All right, it's available to you for $23.88, which is way off of our regular monthly package, which is $5.99 a month. And so, if you're interested in this, I'm going to make it even better, because for 50 of you, because I have 50 copies of our home study course. I have 50 copies of our home study course, which is all about fundamentals, all about what we call technical analysis advantage. Also, advanced trading methods, and our resource guide is all put together, a 4-pack piece that we put together. This is something I got to tell you. Last time I did a course like this, over at Optionetics, that was $1,000. That was $995 for that. In fact, early on they were $3,000, but we were doing courses for $995 for this type of course. This is all updated. I have not done one of these in 10 years. It's out. We're shipping it. I do know that those of you that are tools members that are overseas, I did find out today that there are some that are still in customs, that are clearing customs and on their way to you. So I'm letting you know that they did go out. All right, but I just want to make sure you're aware of that. That if you're saying I didn't get mine yet, well, you didn't get yours yet because it's being held up. But it's not being held up by me. It's being held up by customs. You should be getting them very, very soon. So, guys, that is our package that we're doing. And for the first 25 of you, sorry, not 50. I only have 25 of these. So first 25 of you, my mistake, that we're going to throw in those last 25 copies. We'll have more later, and we will be offering them probably not until the end of the year. But we wanted to get these out into your hands. Those of you that are tools members, we want to give you the opportunity to not only get our tools for a year and get all of that education, but we're throwing in our home study course as well, which is I think it's a fantastic offer. So there you go, guys. That's the offer. It ends at midnight, July 5th. Or the first 25 of you that sign up, we're gonna hook you up with some with the home study course. So once again, option tools, contrarian trading signals, money calendar, TradeStream real-time software, my market outlook every week. We're going to give you tons of videos, live support. Then we've got that 300 hours of live trading and training, which comes with that as well. It's a fantastic offer. I mean, even at $7,000. I mean, this actually beats the most of the other guys out there. That, it's funny. I see traders out there or companies out there that offer these, and the guy on the cover isn't the one teaching you. Well, I'm the guy on the cover, and I'm the one teaching you most of the time. I have my team helping as well, but we all know who they are. I mean, these guys are folks I've handpicked since the 90s. So that's who I'm dealing with. If you are interested, click on tomgentile.com/professional trader. Click on the Start Saving Now button. This will take you to a terms of service. Just read that over. Once you're done, hit I agree if you agree. And then it'll take you to our PayPal page, and it's $23.88 one-time fee for the year. And what we'll also do is we'll lock you in at that low rate as long as you want to be a subscriber with our tools. So that's it, Jay. Any final words?
A lot of positive feedback on the session, Tom. Again, the Fib tool is awesome. There's some concerns as to how to upgrade from the tools to the pro, and I'm just letting them know when they click on the link to do the annual, email me at support@tomgentile.com so we can take care of the monthly that's in there
Yeah, any of you guys that want to upgrade, what we'll do is once you sign up for the annual, if you want to take advantage of the special and the home study course, once you get that, we'll cancel. We'll cancel your monthly subscription, so you won't be on a monthly anymore, and you'll be saving a lot of money off the monthly as well. What you're basically doing is when you look at it, you're paying for the complete trader for a year, but you're getting professional trader. I mean, you're prepaying that year of what it would cost for complete trader. That's what the 2388 is. It's 12 payments of $199 a month, all added together, and we're upgrading you to the professional trader package. So love to have you come on board. And like I said, now it's 20. First 20 of you or the next 20 of you, we have a home study kit that's going to be coming your way. So that is it. Thank you very much, everybody. And I look forward to seeing you in our room each and every day. We do our, for those of you that are going to become subscribers, we're in every day from 2 to 4 p.m. Tuesday, Wednesday, and Thursday. We do take Mondays and Fridays off. That's when you have the least amount of news anyway. So, we like to utilize news and look at our short-term patterns as well. But we talk long-term. We talk long-term on Wednesday. In fact, Wednesdays, I come in and teach on Wednesdays, and I talk about long-term. And I also talk about some of the new upcoming things we have going on within our trading tools. So our professional trading package is available for you for a short amount of time. Then we're going to close it up because we do open and close this at certain times. As we absorb more and more members, we want to make sure we're giving everyone as much help as possible. So thanks a lot, everybody. Have a great evening, and I'll have the recording out to you as soon as possible. Take care. Bye now.